Now, I wish I had a dollar or maybe even a barrel of oil for every single person who's told us that they see $100 for a barrel of WTI sometime this year. And yet, when I look at the chart, since November of last year, it's been in a very narrow trading range of about, $71 to $81 a barrel. So what are they seeing that is going to break it out to the upside?
Sure. I think the bulls are expecting China demand to recover. There's been somewhere between 1 and 2 million barrels a day that has been offline due to COVID. That should come back in the second half of the year. There's less pressure from releases from strategic petroleum reserves, particularly in the U.S. And there's a view that hopefully the economy doesn't have too much of a downturn and that we'll see some growth in demand a little bit later in the year. So there's a lot of optimism in the back half of the year among analysts. If you look, as you said, if you look at the forward curves, you don't necessarily see it. And so the investors are saying one thing, the commodity traders are saying another. And I think I lean toward a little bit more the bullish side, but it's been slow in coming, as you mentioned, Mandy.
But what's the bear case?
The bear case would be demand. If you think about the dynamics, we've had underinvestment in the sector for the last 5 or 6 years. We're not going to oversupply this market unless there's a big demand problem. So the economy could certainly be part of it, another wave of COVID or something like that. The one other sort of black swan might be Russia. If there was peace between Russia and Ukraine, my guess is that would pull down price, relatively meaningfully, $5 or $10 a barrel. And so, I think it would be Russia or the economy. Both of those probably, in my view, right now are relatively small influences during 2023. So, unless you're a big economic bear, you've got to be pretty constructive on crude.